Anne-Marie, you
Hello,
there?
this is Anne-Marie. I
Hey,
sure
Anne-Marie.
am. How are you?
Dennis and Joel here from Benzinga's Pre-Market Prep, and we're just talking about stocks that go parabolic. We're looking at the CYBR, and this stock has basically doubled in 2 weeks. And we've got some people, in the chat saying this is, it could be a good short opportunity, but obviously there's major risk on all sides of this. We just were looking at the options, and the option for the 65 put when the stock was trading up at 70 was going up for over $4. So you're talking about 8, 9, 10% premiums for a month. How do you play something like this, or can you play something like this, the CYBR, when a stock doubles that quickly?
Well, there are a couple of ways to trade that sort of thing.
Okay.
And it would depend on whether you are thinking about a very short intraday event or if you're thinking about a short-term swing. Now, my space personally is when something goes parabolic like that, unless you really got it at the break or a retest of a breach, it's very dangerous to take it overnight into the next day. But
Yeah.
from an intraday trading perspective, very interestingly, if you move to a small time frame, when something becomes parabolic, it really makes for very clean trading off of the 50 simple moving average on a 5-minute chart. And what I like to do, because I'm always looking for the lowest risk space, I will look for an area that lots of buyers have determined as the ground space. For instance, if you look at Friday's chart, a 5-minute chart, and you look at the 50 simple moving average, you'll see right at the open, it comes in and tests that region and begins to break out quite rapidly above there. One of the things you might say is, wow, that's really already moving very quickly. I know it's coming off the 50. That's a very important level. It means that buyers are going to support that region tremendously. And indeed they did, but when things start moving extremely tightly, then you tighten up that moving average. You move it to a 20, and you wait until it comes into the 20, and you take it off of that level. One of my favorite tools, of course, is the Fibonacci. You can draw Fibonacci off of that morning wave on a 5-minute chart, and it'll give you those extensions. And here's the rule. If you don't break support, you can stay long. As long as support doesn't get broken, you're in great shape. The moment support gets broken, it tells you that the line of defense built by the buyers is being penetrated. And that is a very important clue. And so when things begin to break down and pierce what we see as relative support, or when they begin to move sideways, we really want to draw that line in the sand and say, hey, listen, you know what, that's where I'm at. Now, of course, we can see this morning it's dipping quite a bit. So the pre-market's got it. If you draw that 5-minute chart and use that 50 simple moving average, you can see that it's come right up into it in the early part of the morning, really trying to breach the area, but it is quite clear that the sellers have drawn a line in the sand and really are trying to exert dominance in this chart. For me, I don't like trading long underneath the 50 simple moving average on a 5-minute chart. If I'm trading intraday, it means the force of pressure is against me, and I prefer to work with a tailwind than a headwind. I didn't always used to be like that, but I got tired of losing money.
Right.
For
What about the
me,
dailies? I'm not a big simple moving average, fan. I tend to rely more on daily highs and lows and closes. And man, oh man, to me, like there's really no support until 64. Because that was to me, that's a low for
exactly.
yeah.
No, you are exactly right. Now, therein lies the rub. If you are looking at a stock that is moving parabolically, your risk to reward ratio becomes extremely adverse. If you want to expose yourself to something like this, you really are chasing a chart that, frankly, is going to exhaust. It's only a matter of time. So
Yeah.
if you haven't gotten in on those first 5 days after the earnings event, you have to say, wait a second, is there another fish to fry here? Are there other pieces that I can go in and make a much more reliable bet that is not going to leave me exposed as to chase something like this? Many of us are stricken by a panic of I can't get away from this. I've got to be part of this. And the market is like a buffet. It's open every day. Sometimes you're just not going to want to touch that piece of cantaloupe because it's been sitting there for 5 hours. But do you know what I'm saying? So I'm saying that these types of rapid motion events are best traded intraday. And I totally understand looking at the moving averages and not being confident in them. But the fact of the matter is they are the most reliable technical indicators to use in parabolic motion because they tell you when things are drifting. Their slope will change.
So when would you look at this, Anne Marie, and say, okay, well, this thing's, maybe not sustainable. It's eventually going to pull back. How can you play this from the short side, though? When can you play this from the short side? When it gets below that 50-day, or like from a swing trading perspective, not from an intraday perspective?
Again, it falls into the element of, for me, this is when I would look at fundamentals. I would say, well, wait a second, what's causing this driving action? If there's something that's materially significant that will change the face of a bottom line's revenue or earnings per share, it's worth it to look at that and say, you know what, I'm going to wait until this pulls back. I don't know how excited buyers are about coming in, but I'm going to wait until it comes into, I don't know, maybe 63.90, 64, and I'm going to take a small bet there with a stop maybe around 61.75, something like that. That's really fairly tight from a daily perspective, but I don't want to get overrun by buyers because they're obviously the ones in charge right now. And so I tend not to try to step in from a counter trend perspective because, I don't want to move against the crowd, right? I want to sort of slip in there with them. For me, the first thing I'll do to find out where in the world a chart is going when it's got that kind of motion, I will draw a Fibonacci. And I'll draw that Fibonacci off of a breach period. Like from the daily perspective, we can see that this chart essentially had a very short wave and broke up. Right now, this thing is 314. The Fibonacci is 3.14 above that last major wave that we had that began in November 21st, with the low somewhere around February 2nd. That wave is tremendously expanded and sitting really at resistance today. So we know we're going to have some measure of pullback. It's already here. The question is, where are those buyers sitting? And my guess is they're really not sitting in super strong spaces until about 59. And that's quite a ways away from where we are right now.
Right. Let's just move on. We've got some other stocks here in the chat here to take a look at. And I'm not sure if it's the same space, but Splunk, SPLK. Could you pull that up for us and give us a quick appraisal of the price activity in this issue?
Okay, well, this one is coming up into resistance, right? It's had a high somewhere around, again, November the 21st. Essentially, this one's been in a monstrously long channel. Monstrously long, and so it really is coming into test. It's made a series of higher lows since August.
Wow.
And now sitting at resistance. And it's going to have earnings in a couple of days. So for me, hands off. I'm not going to touch anything like this, because if it's got some kind of basing event here, if you want to look at how to measure the likelihood, if something big is happening in here, this stock really has 2010, a minimum of a 5-point move into a next major region easily. I don't know what the option chains have sitting here for this one, but it can go either way. It can fall right back down in the 58.60 area, or it can move right up into the 75, 76 area.
What about if you were
For
long
me,
the stock? If you were long the stock going into earnings here, let's say you caught or even something like this CyberArk, that's a little bit more difficult. But would this be? I mean, you caught a nice run here. Is this something where you would take it? You keep moving your stop up. Maybe sell half your position ahead of earnings or buy some puts or something like that. Because approaching things like having to approach this as a short is really difficult. But if you're long the stock and you're sitting on some nice profits here, is any different approach?
most definitely I would take some off the top, but my favorite thing to do if I'm holding stock and it is at resistance coming into an earnings space, I'll put on a vertical collar. And in order to protect it completely, in case it completely falls out of bed, or it falls back enough for me to collect the premium that's going to be associated with that vertical collar, what I can pull off of it. I like the vertical collar because it allows me to finance puts in case it's something really bad, and still gives me the opportunity to surrender at a profit if indeed it accelerates rapidly and I get exercised. So I like the vertical collar a lot better than selling calls or buying puts, depending on where it is I got in, certainly. If I got in and I've got $3-4 sitting in profit, then, putting on a vertical collar is the smartest thing for me to do, is what I would choose.
Anne-Marie, can you just walk us through a vertical collar? We have a lot of listeners here that probably don't understand what you mean by that. Can you just possibly
Sure.
walk us through an example of that, just to educate us?
Yes, let's look at Splunk, for instance. If we
Okay.
go to the option chains, what a vertical collar is a combination of calls and puts. I will sell calls against my stock, and I will buy puts relating to that. So let's say I purchased this at 65.
Okay.
Let's say I purchased it at 65, and I am looking for protection. That's my main reason. It's true protection. It's going to cost me a little bit of money, but let's say I am looking for something really big to happen, one way or the other, and so maybe I sell the March 1st 70 calls. Now I could go into the February 4 70 calls. It will deliver a little less premium to me than the March one. So that's really the reason that I will go in there into the next week so I can sell additional premium. And then I will go into because I got it at 65, I will put my floor down there so I don't lose any. I'm going to buy the 65 puts. And so what the 65 puts do is I have to spend $2.50 on that at this juncture. I get to collect $3 at the 70 calls, and so I have 50 cents of profit. So even if I have to surrender my stock at $65, I have 50 cents of profit sitting in that position. If I have to surrender the stock because it went up to 70, then I've got $5 in my position. So the vertical collar is a tremendously powerful instrument to use to protect yourself on both sides, even though some folks get married to stocks that they hold and they don't want to surrender it, which is why they think, hey, I'm not going to sell calls against that. But me, I'm really such a short cycle type person that that's not something that I think about at all.
Okay.
Very helpful. Thanks,
Yeah,
Anne Marie.
thank you. We've been on the line with Anne-Marie Baiynd. She's an author and financial analyst. The book, The Trading Book Course, A Practical Guide to Profiting with Technical Analysis, if you enjoyed the comment. Anne-Marie, you still haven't made it into the world headquarters yet. When can we? You're probably not leaving your house in this minus 10 degree.
I know. It's -7 this morning.
Yeah.
It was -17 on Friday morning.
Unreal.
Yeah.
It's like the
Yeah.
tundra. It's crazy.
Wicked,
Everything is
yeah.
so frozen out there. Like you touch the snow, it's just pure ice. It's been so
I
cold
know.
for
I
so
haven't
long.
seen my street since January.
Okay. Anne-Marie
I'm
Baiynd,
serious.
thank you for joining us. We love your input, and we'll talk to you again soon.
Thanks for having me. Have a great week.
Okay.
Thanks, Anne Marie.
Hope our traders took some notes there.
That was very,
What
she's
I
always so
like
helpful.
about it is that we just we threw some of the toughest stocks out there to be able to analyze, right? And
Yeah.
what she did is she stuck with her framework and what
Yeah.
she looks at, and obviously she's profited from that framework, or else she wouldn't be using it. Like I tried to throw in the dailies in there, and like she did, she mentioned, yeah, well that's significant, and those are things that they're looking at, but she was really confident. And I think when stocks do start moving like CyberArk, I mean, how are you going to rely on the dailies? If it takes out that 64 low, I mean, is it really going to go down under $60? I mean, it's not realistic expectations. But the Dennis spoos are not bouncing much here. Still down 4 points.
Very tight.
Yeah, got a little rally here. What you looking at? What's on your radar?
Well, just looking here, obviously, like I said, we got crude trading down at $1.87. So the crude stocks are going to be weak. The individual oil stocks and airlines are going to be strong here. But I'm going to keep an eye on crude. And if you see any type of a turn, you've got to, as an intraday trader, you want to be able to identify when those turns happen and possibly trade on them. So I'll be watching the crude. I'll be watching the airlines. I'm also watching these imbalances here too, though, Joel, because a lot of interesting sell ones this morning. We talked about Pfizer earlier at 8:30 with 674,000 to sell, and that's still trading down significantly here in the pre-market. Also seeing Coca-Cola 277,000 to sell, and that's very significant for Coke. And it's actually trading down 27 cents here in the pre-market too. So if you're looking, why is Pfizer trading down? Why is Coke trading down? The imbalances really move. The pre-market opening imbalances really move stocks, and that's why Coke's trading down 27 cents here. 277,000 to sell. Also seeing Ford 156,000 to sell. Couple other ones. McDonald's 41,000 to sell. Some of your gold stocks, ExxonMobil, obviously. Procter Gamble, 52,000 to buy. That's kind of going against the trend here, but there's definitely a few sellers lurking out here and some individual issues today.
And I'll just gonna just take a look. You mentioned the airlines and the oil and stuff, and it has backed off a little bit. Love is what I'm going to be looking at here. Potential short. As obviously had big sellers here at 45, 44.95, and 97. Now you spiked up pre-market trading here to 45.86. You backed off there. Boy, I'd love to get something off near that pre-market high, maybe some size at 46 to lean on. But looking for love here to come in a little bit here, perhaps off the open, and then also just go into a general market talk here, and we can talk with Scott Redley when he comes on here at the top of the hour. But you do have a setup here that I guess you could call the red dog reversal, or you could talk about, J.C. Peretz, similar kind of formation where you have a very well-defined area of resistance, and you have to classify that move on Friday as a breakout, right? We had all those tops at 20.98 and change. We did break out yesterday. Now the question will be, can we, is it going to hold that area now, support, and continue to break out the new highs, or are we going to have a reversal in the market? So I think it's very important for the S&Ps to close above 2,100 today. So that's a little longer-term outlook. But Dennis, we're going to let you go. It's 8:55, and it's time to do the morning headlines with Brianna.
Well, it is Monday, February 23rd, and Greece will crack down on tax evasion and streamline its civil services in its bid to secure a bailout extension. Minister of State Nikos Pappas has said the government is working on a package of reforms that it must submit to international creditors today. If the reforms are approved, Greece will be granted a vital 4-month extension on its debt repayments. Pappas said the reforms being proposed would take the Greek economy out of sedation. The White House says it wants greater protections for retirement investing. It unveiled broad strokes of a proposal Monday that would hold financial advisors handling individual retirement accounts, IRAs, and 401ks to a higher standard than they currently are. This change means financial advisors would be held to a so called fiduciary standard. Translation, they would formally have to put these best interests of their clients ahead of their own interests by recommending the best product, even if that means taking a smaller fee for their services. The White House acknowledges that many financial advisors already do that, but it wants to extend the standard industry wide. Honda Motor Company on Monday named an experienced yet little known engineer as its new chief executive, who will take over in late June, with the Japanese automaker battling the fallout from a slew of recalls that have shaken its reputation for quality. Takahiro Hachigo, who's 55, joined Honda in 1982 and has worked across research and development, procurement, and manufacturing with spells in the United States, Britain, and China, where he is currently a senior official at the R&D arm. He will replace Takanobu Ito, who is stepping down after 6 years in the post that saw Honda struggle through the global financial crisis, natural disasters, and the more recent damaging recalls. In another management shakeup, Dish Network founder and chairman Charlie Ergen will retake the reins at the satellite company after accumulating $50 billion in wireless airwaves that he has yet to use. Ergen, who's 61, will take over from Chief Executive Officer Joseph Clayton at the end of March, Dish said on Monday. Clayton will retire after leading the Englewood, Colorado-based company for almost 4 years. Investors will focus on how Ergen plans to revive growth at Dish, which has lost 79,000 pay TV subscribers last year. The executive who co-founded Dish more than 30 years ago is under pressure to explain his broader strategy after his binge on Spectrum and the debut of Sling TV, an online TV service for $20 a month. Apple said on Monday it would spend nearly $2 billion to build its first 2 data centers in Europe, the latest U.S. tech giant to open computing centers in the region amid a tightening regulatory environment. The 2 data centers, each spanning 166,000 square meters, will be built in Denmark and Ireland, the latter serving as Apple's European headquarters. The data centers will go online in 2017. They will be used for a range of Apple products, including iTunes, messaging, and Siri, its software that recognizes some spoken commands. Apple joins a growing list of U.S. companies looking to plant servers on European soil, including Amazon and Salesforce. The move comes as Europeans have become more concerned about data privacy and allegations of spying by the U.S., fears that were heightened after leaks from the former National Security Agency contractor Edward Snowden. And of course, in a battle of B movies for Best Picture, the Academy of Motion Picture Arts and Sciences awarded Birdman Best Picture at last night's Oscars ceremony, opting for a movie that epitomizes much of Hollywood, showy, egomad, desperate for artistic credibility. Birdman also won Best Director, Best Original Screenplay, and Best Cinematography. The Oscar for Best Actor went to Eddie Redmayne, who tackled the real-life role of physicist Stephen Hawking in The Theory of Everything. Just a quick reminder, our show is brought to you by our friends at Nadex, where you can find protection from market spikes and opportunities in flat markets using binary options. Open an account today with no fees and only $100 as your minimum deposit. Tell them your friends at Benzinga sent you. If you miss any part of today's show, you can listen to the whole thing again on our podcast. Find us on iTunes, SoundCloud, and Stitcher by searching hashtag premarket. And don't forget to tune into our next special segment all about crude oil this Friday, February 27th, where you can discover the most profitable investments in energy right now for free with experts like Doug Cass, Dennis Gartman, and many more. We're about to bring on Scott Redler. If you like hearing Scott's daily take on the market as well as key levels, you can subscribe to his Redler All Access and get Scott's morning note, private Twitter feed, and daily video call. I'm going to drop a link in the chat room, and you can mention a promo code REDDOG for $101 off the regular price. Joel, shall we go take a quick break to grab Scott?
Sounds good. We'll be right back.